Good evening, gentlemen. I'm back and with a more insightful and a more interesting discussion, which is about payments. Which is again taking over from the CEO panel discussion, where we spoke about what is the next for Africa and how we're going to fast track the digitalization of Africa. Now we're going to talk about a very important component of banking, which is payments. And as all of us know, that 9 out of 10 payments in Africa and in one of the most advanced markets of Africa, which is South Africa, cash is 9 out of 10 payments are made in cash. So cash is a main competitor here, and cash in this kind of a scenario is not only we need to figure out a way how to reduce that component, because that could be a carrier for the for the COVID-19, but also it could, how do we take this financial inclusion and the whole payment scenario in Africa to the next stage. So I think I would first point my question to Mohit, who manages the Mastercard franchise for Africa, is saying that how do we convert that, keeping the current scenario of Africa in mind, and considering that we have Africa at the bottom of the pyramid. Mohit, over to you.
Thank you, Abhinav. Hello, everyone. Good day to all of you. Thank you all for joining and taking the time to talk to us today. Hope you all are keeping safe, first of all. My name is Mohit Aery, and I'm a director at Mastercard, responsible for e-commerce payments products across Middle East and Africa, and I'm based in Dubai. We heard in the preceding sessions on how creating a unified customer experience is a key for better banking. The better customer experience has to be built on a foundation of trust. Because if there is no trust, there is no business, right? And I think it goes back to the medieval period when people used to bank on the LCs. And now I think the world has changed tremendously from there onwards. There is no doubt that our world after 2020 will be dramatically different to one that existed before. The COVID-19 pandemic has created an increasing digital world, which means we are working remotely, we are shopping more online and in store. And as a result, even more data is being created every day. So against this backdrop of technology, of digital payments and artificial intelligence in particular, will optimize how we work and how we live. From generating new business values to keep people safe and secure. From the business leaders whom we heard in the first session, all the CEOs who were there on the panel with Abhinav, I think the race is already on to navigate a way through the next normal. As there is a tremendous opportunity with AI, so I would like to highlight that the criticalness of AI is where and how we are creating that AI data for the use. And it has to be more, which requires things like good quality of data coming through from different channels of where the banking or anybody else is using at the moment. The use of AI creates a world where the high quality of data is no longer just a nice to have as an element, but I think it's become more necessary where the business has to survive by using the data. The new world is also the world where the new tools, the enhanced networks and faster connectivity is coming into play. If you look at Africa in 2009, where it used to have only 50, 52, 53 million connections of internet, in 2019, it has grown 500%. And now we see more than 525 million consumers coming on board on digital platform. So that's the great power of processing and the nuanced capability that we need to build to create more accurate data outputs. And also when it comes to trusting AI as a technology, consumers are still divided. On one hand, they have tendency to distrust the AI technology, and this inclination is regularly reinforced by the news that we keep on hearing in the media on biased algorithms, data hacks, privacy breaches. We did a study in May 2020, which found that less than 30% of consumers felt comfortable when businesses using AI to interact with them. On the other hand, we have consumers who rely on AI despite their own biases. Without realizing, the trust placed in the AI systems is extremely high. And just think about how we operate on a day-to-day manner, which is whether we are accessing our emails or we are accessing Google Maps, having a Netflix account, Twitter, Amazon, everything we rely uses the AI technology. Therefore, the effect on Africa digital development has been vast as the pandemic has forced an accelerated evolution of the continent's digital journey. And I'm again re-emphasizing on the acceleration because this was talked about in the previous panels by the CEOs. So, unable to trade in the physical locations due to lockdown, many of the small businesses have no choice but to move online and continue to do the trading. At the time of heightened sensitivity of personal contact, consumers are adopting contactless payments as part of their new touch-free experience of behavior, and they deter to go in the stores. And we've also seen an increasing trend of buying items online. AI and immersed technologies have already been making waves into Africa, by the way. In April 2019, we saw Google opening their first research center in Accra, and I believe this was more focused on the healthcare development, agriculture, and educational solutions. Within the payment worlds, what we as a Mastercard we are doing, we are promoting contactless usage. There is the QR technology that is being adopted in most of the Africa, and these are very economical solutions that we are talking to our consumers. I mean, they are not cost heavy, they're easy to deploy. The other one that we are surely launching is in the near future is about what we call as tap on phone. This is a technology which allows the businesses to accept contactless card payments via the smartphones and have fast and convenient way of and provides a fast and convenient way of for the consumers to shop on. So these are some of the trends that I would like to focus here, and I would like to give it back to you, Abhinav, to get more views about the other panelists who are there on the same session.
Abhinav, you're on mute. Please unmute, Abhinav.
Sorry. Okay. Sorry. So we have Jan from BankservAfrica who's there, and I would like to take his views on what Mohit spoke about and how does he think, we're going to resolve this thing.
Okay. Good afternoon, everyone. Hopefully you can hear me. I agree. You took our statistics that our big competitor when it comes to digital payments is cash. And unfortunately, I think Mark Zuckerberg from Facebook, when Facebook started getting into payments, he said that payments should be as easy as sharing a photograph on Facebook. I'm not sure that's exactly where we want to go. However, today when you compare how easy a cash transaction can be and how complex and difficult it is still to send money to one another, that's what we are trying to fight. So you mentioned South Africa. We have an ambitious goal of building a next generation payments platform, which makes things a little bit easier. And the objective is to start taking away, the leadership position cash is holding and go from 9 to maybe 8, maybe 6. It's an undertaking because, for financial inclusion, the simplicity is one thing. The other thing is access to digital data. Even now we are doing everything virtually, but sometimes, my data connectivity is dropping and I'm just hearing half. So making sure that digital inclusion happens as well across, especially the southern part of Africa, is a big thing for us. So the second thing we have to do, and the big topic there, is digital identity. We believe being it banking sector or some other sector, somebody has to take the leadership role in establishing digital identity for different countries, being it self-sovereign or provided by a central entity, and basically enabling verifiable claims. With COVID, we cannot see each other. You cannot look at my driver's license. You have to trust me what I say about myself in the digital space. And we've learned again throughout the COVID crisis that this is not easy. So second area, besides making payments simple, is really bringing digital identity and verifiable claims more broadly. And last but not least, what we are busy with, commerce is global. Payments are more and more global. Our lives are more global. We are talking across India, Africa, and other parts of the world. We are trying to come up with solutions which can serve the region and ultimately the entire continent. And the idea we have in our head is times are difficult. Not every country, has the money currently available to invest into a brand new platform. Why don't we put payments in the cloud? Kind of imagine the idea of Office 365. You don't have to build a massive infrastructure internally, but whatever you need for the next year, you can just subscribe for. So we call it something like regional hubs for domestic use by multiple countries. And that's kind of our third area, how to bring better payments experience into the region, both domestically and cross-border, because as I mentioned, commerce doesn't know borders anymore.
Right. Thank you, Jean. I think you and both Mohit spoke about AI and how do you onboard customers and how do you do a KYC of a customer without meeting the customer. And we have our blockchain expert here in terms of Benjamin. I'd like to really hear from Benjamin in terms of his views and ideas, how to get customer KYC and customer onboarding without meeting the customer. And maybe you can also tell us what Mark Zuckerberg said about exchanging payments as we exchange photos. So with blockchain, maybe we can do some of that stuff, right, Benjamin?
Thank you, Abhinav, and thank you everyone for joining the session today. It's a great pleasure to be here, to be part of this summit. And interesting what Mohit and Jan have talked about already. Just adding, especially now with focus on blockchain, I guess blockchain, if we compare particularly Bitcoin and many of the payment processing services that already exist, including Mastercard and M-Pesa, we still consider Bitcoin quite really far slow. But if we are to compare Bitcoin and many other maybe blockchain-based payment services with existing cross-border payments such as SWIFT, then we would say that these blockchain-based services are now faster and even cheaper. And I'll give you one example of a typical business lady in Kenya, in a place in the Rift Valley of Kenya. This is quite far from Nairobi, the capital. And this lady she's a saloonist and also does other small businesses. She has a sister in Ghana, and she sends her money using via bank. And according to her, it costs her a lot of money. So the cost of sending money is one of the greatest challenges in the traditional banking services infrastructure. And that is number one thing that blockchain could solve. Now, let me give you a good example. Now, if this lady sends $100 from Nairobi to Ghana, it costs her about $14 to send $100 if she sends it via Standard Chartered Bank. Now, if she sends it via Equity Bank, it costs around $18. KCB Bank, it costs around $24. Now, if the same lady takes this $100 and opens a Paxful account, a Paxful account is a peer-to-peer Bitcoin trading platform. Now, if she opens a Paxful wallet, she buys Bitcoin worth $100 and sends to her sister in Ghana. It costs her just $2.10. And she's able to send that money within an hour. Yeah, so these are real examples of the advantages that Bitcoin or blockchain-based payments platforms are bringing to the banking ecosystem. And there are other payment solutions that could also really add up to these to the benefits that blockchain is bringing. So blockchain ought not to be revolutionary. It ought not to be viewed as revolutionary, as going to change everything in banking. But I believe the transition into the benefits that blockchain is offering in the banking sector should evolve very smoothly. One good example is blockchain-based eKYC. And there is a single example in Kenya. There is a blockchain startup that was recently admitted to the Capital Markets Authority of Kenya's regulatory sandbox. And this is called Belfrix. Yeah, they have a eKYC blockchain-based platform. Yeah, which helps in admitting or onboarding investors and other customers without having to go through physical KYC processes. And all of us know that banks spend billions of shillings every year in KYC processes. Yeah. So if blockchain technology and other technologies can be used to improve the KYC process and custom onboarding processes, then there will be a lot of savings in cost of onboarding customers, and there will be an increase in speed of onboarding customers. Because remember, as part of this process, we are also trying to reduce the unbanked and bank the millions that are still unbanked across Africa. If you look at the internet access right now in Africa, it has really grown. In Kenya, in the year 2000, only about 200,000 Kenyans were using internet. Right now in Kenya, the internet penetration has gotten to 87%. Actually, I believe it's the highest in Africa at the moment. So with that, it gives us a tool that we can be able to roll up a number of digital payment processes or systems to increase access to banking services across Africa and even across Kenya. Thank you, Abhinav. I'll hand over to you.
I have Peter also here with me, and I'd really like to hear from Peter his views in terms of the payments and how he looks at cash being converted into virtual in an African perspective. Peter, are you around?
Trying to unmute.
Hello. Yes, I'm around. Thank you for this. The issue of payment has been critical, and it's an area that has become very complex. Noting that we are operating in a very complex, dynamic, and overlapping and interconnected ecosystem. And given that situation, and the fact that our customers, either from banks or the ecosystem, they are always on mobile and they want their life to be met at any point instantly. So for this reason, I think the issue of virtual payments has become critical, and banks are moving to that. They're moving towards ensuring that we have virtual accounts. This could be completed or the onboarding through KYC, onboarding through online and digital identity, which have actually been evolving as we move on. So there's a lot of integration through APIs, open architecture, which is being adopted by the banks in the systems to ensure seamless integrations that will aid in ensuring that the customers are facilitated through these virtual payments or open virtual payments, and then with minimal human intervention, they're able to transact wherever they are at their convenience, within the borders and outside the borders. But yes, there is that threat, but again, operating within the approved regulations, noting that some of the institutions like banks are fully regulated. But it is an open check, and I think there's a move towards that, ensuring that there's that facilitation in terms of payments. It's complex, but to ensure the completeness and ensuring the customers or the consumers of the services enjoy fully, the integrations are happening on the as much as possible, given that we are coming from an era where we had systems which had rigid architectures across, and with the coming up of artificial intelligence and also blockchain technologies, which are helping. I know we are still not yet there on blockchain, but on AI, there's a lot of analytics going on, and most of the banks are adopting the machine learning and artificial intelligence, especially in trying to exploit the insights that comes with the big data. And their banks hold a lot of data. They want to, and working together with other institutions in the ecosystem, we are able to complete and offer the customers more services and with a lot of convenience.
Thank you, Peter. Thank you very much. I'm getting signals that we have a lot of questions pouring in for this interesting payment session, because everybody seems to be very interested in how payments are going to structure out post-COVID and what are the trends. So I hand over to Fahad to take over the questions.
A lot of blockchain questions. So Benjamin, you better get ready, okay? Who can actually start blockchain? How the security question and on blockchain can be convinced? How the security question on blockchain can be convinced? This is asked by Shemilis Wasena. We've heard a question from him on the CEO panel as well. So go ahead.
Fahad, I didn't get clearly the second question. Could you?
Okay, it's a combination of two into one. Okay, how can actually start? Who can actually start blockchain? How the security question on blockchain can be convinced?
Okay, that question is quite broad. The answer could be quite broad as well, because it depends with which type of blockchain you are using. Anybody can develop a blockchain platform, yeah? And also, when it comes to joining a blockchain ecosystem that is already existing, it also depends on which kind of blockchain. If it is a public permissionless blockchain like Bitcoin, anybody can join such a blockchain. Ethereum, anybody can join such a blockchain. But there are private permissioned blockchains that require permission from the creators for you to join. Yeah. So when it comes to security, again, that also depends on a number of things. And one could also include the integrity of the code that has made up the blockchain itself, and also depends on the consensus algorithm that is used on that particular blockchain. So blockchain is really quite wide, and it also depends on which blockchain are you using. Are you using a private permissionless blockchain? Are you talking about a public blockchain? Are you talking about a consortium blockchain? All this depends a lot on the kind of blockchain that you're talking about.
All right. The next, I guess, can be a good tag team partnership between Jan and Mohit. Does the digital transaction is increasing or decreasing in Africa after introduction of the pandemic? If increasing, which transaction naturally increases? Is it good if that can be supported by data of the region, if any? If any of the two of you can actually take this up. And I trust
Sure.
you understood the question. Yeah.
Yeah. Mohit here this side. So I'll take a stab on this one. So yes, because of the pandemic situation, the electronic payments have increased tremendously. This has been a growth across Africa. It is not just limited to one single country in Africa. And on an average, if you see before pandemic, the growth for e-commerce transaction, which we call it as card not present, used to be in the range of 15 to 20%. But after pandemic, it has gone up on an average across all various markets in Africa put together. It's close to about 36 to 40%. So, which is a huge jump that you've seen as to what the trend used to be earlier and what it is now. And thankfully, I think the technology has also played a vital role in permeating the acceptance and 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 the transactions that is being done by the consumers. So, Jan, if you would like to add something
Yes,
from your
hot
side.
tag to Jan. Yeah.
Yes.
Yeah. So I have to say I have a different view from South Africa, and it may be because of the strict lockdown which was introduced by government. It depends what you count as a digital transaction, but basically the economy here in South Africa came to a standstill. So we saw, we see all digital payments across the sector. We even see, salary payments and stuff like that. So we issue some indices which predict how the economy is doing. And when you look across, we saw like 30-40% decline in transactions overall. But I link it to the economic impact of unfortunately were ATM transactions. So basically people receiving aid from the government, withdrawing that money and keeping it in cash to still transact in cash. That's unfortunately what we have seen. Since some of the lockdown measures have started being lifted in South Africa, we see an increase, but we are still not at the level pre-lockdown. So that's unfortunately what we are seeing. By the way, I also have some thoughts on Ben's blockchain ideas, but let's leave it for some other discussion when we get to the discussion of the panelists.
Okay, speaking of blockchain, hot tag to Ben right now, and I guess even the two of you can answer this the question. One is more Kenyan focused, and one is purely again blockchain focused. What is it's from the same? It's actually part of the same question. What is the regulation on blockchain in Kenya? Is blockchain actually regulated? Is blockchain now a formal means of payment in the country? Ben.
Thank you, Fad. Blockchain currently is not regulated in Kenya. And to be specific, cryptocurrencies, starting from 2018, the main regulator that should be regulating cryptocurrencies or digital assets is the Central Bank of Kenya. In 2018, they issued a cautionary statement against investing or using cryptocurrencies. The Capital Markets Authority is also a regulator in that direction, and the Capital Markets Authority has actually created a regulatory sandbox to admit blockchain-based solutions in a test environment called a sandbox. But interestingly, they can only admit projects that have nothing to do with cryptocurrency. So it has to be only blockchain-based and not cryptocurrency-based. Yeah. So blockchain is not regulated in Kenya. Interestingly, of late, there is what we call the digital service tax that is being discussed right now by the Kenya Revenue Authority. And part of that, the discussion is to even tax blockchain-based or crypto-based companies, online crypto-based companies. So there has been a discussion of how can you tax an industry that you have not regulated, that you have not recognized. Yeah, so It's still a discussion that is going on, and we don't know how it's going to come out. But there are already efforts by the Blockchain Association of Kenya to introduce a bill, to propose a bill for the regulation of crypto assets and even the blockchain. Yeah, so probably with that, we would see that discussion could take even up to 12 months before we can see any outcome of it. But at the moment, there are clearly no regulations of blockchain.
But I think, let me also ask you this, Benjamin, is that I'm sure Kenya is the first country to make such an advancement in Africa. I don't think any other country would have even gone that much ahead as far as Africa is concerned.
In terms of taxation, did you mean that?
In terms of the regulation of blockchain at least being considered, or a sandbox being created or whatever.
Yeah. Kenya has really done good compared to most countries in Africa. Right. But we'd also say Uganda has also really been doing good. We've really seen good reception from Ugandan government. Right. Yeah, but other than Uganda, Kenya has really been doing good in entertaining blockchain, because actually we have a task force from the ministry, creating the Ministry of ICT, that is Blockchain and Artificial Intelligence Task Force. Right. And if you look at the report, there's a lot of recommendations of introducing blockchain across industries and across sectors in Kenya.
Yeah, because I haven't heard of this in any other country in Africa.
That's right, Abhinav.
All right.
All right, Abhinav, let's take this last question. It's come from NCBA Bank Tanzania, Ms. Eva Kovis. Considering the move to virtual payments has largely been contributed to the pandemic, what are your thoughts for sustainability and to ensure it is the way forward rather than customers going back to their cash ways?
I think Mohit is the right guy to take this, right?
Thank you. So, as I mentioned earlier, so we did a quick study somewhere about April when pandemic started, and we saw the change in the trend of the consumers. Although Jan did mention that South Africa was different, and maybe they were different at certain points when the lockdown was implemented. But post-lockdown, when you see the economy coming back, that's where I think we've seen a clear growth in the digital transactions. And when we say digital, it could be in-store, which is a contactless, where people are now shying away giving or taking out cash or giving away their cards for transaction. It's more to do it by yourself. That is the clear trend which is coming out. And obviously people who are now more dependent for shopping online. So that's where I think the trend is continuously growing. When we did the study, I think the respondents, about 80% of the respondents said that they will continue to follow the same trend. A, because of the convenience. Second, again, from their own personal health and security reasons. So we don't know when the second wave can come and hit you back, right? So it's a precautionary thing that everybody is thinking to continue exhibiting this behavior. Now, when you even go to the merchant or any outlet, you see the behavior has already changed. The markets where you've seen the lockdown is open and people are moving out, they're resisting to take cash or to take the card. I mean, they're more prompting the users to use the digital media for payments. It could be the regular payment schemes, which could be Mastercard, Visa, or issued cards, or it could be mobile wallets or any other digital form. Like in India, it's Paytm, which is growing big. So these are the alternate form of payments where cash you cannot eliminate, but definitely there is a trend where people are going out to use more alternate form of payments than using cash.
Thank you, Mohit.
Mina, maybe if I can just say a few things here, just a thought as I was listening to Mohit. So first of all, I think we should never waste a good crisis. I think I spent some time in China last year, I think. And, SARS actually expedited the migration of Chinese population away from cash to all the digital forms of payments. Of course, there it's not provided by banks; it's provided by the social media platforms. So I think we have an opportunity to expedite digitalization of economy. One thing I want to, because I moved from Canada and from Europe, there are some specific issues which we need to resolve first. Why people, it's not that people take cash because they like to keep it, in their house and risk that somebody may take it away. The problem here is, and most African countries, based on my understanding, are similar. The micro merchants and the small merchants are driving the economy. Unless we can find a way how to digitize these channels and acquisitions within these micro merchants, it will all go back to non-digital. So we need to basically find a way how to digitize and enable digital payment acceptance by the micro merchants, and that's the task, and that's the very, very difficult task, which will take industry, fintechs, blockchain expert, everything to actually resolve. And unless we do it, cash will be around because people have to buy where they go, and the world will go back to normal. We will continue shopping, physically. We have to.
I absolutely agree with you, John, because 85%, as per the ILO statistics, 85% of the African economy is the micro merchants and the SMEs. So that's a very big chunk.